I'm outside in an AMG, right outside, TT, two-turn baby girl, you know me, still with the dogs that I grew beside, all the niggas brown, ride and they die, gotta watch the time cause it's flying right by.
What's going on YouTube? It's your boy Chris, aka The Capital Connect, and in today's video, we're going to be going over my top 2 trading strategies for 2025. Now, I know there's always been a debate on how many strategies you actually need in order to succeed in trading. To be honest with you guys, I'm going to be real with you. It's one, right? You only really need one strategy in order to succeed in trading. However, what you got to understand is if you only have one strategy and you only see the market one way, you're going to have a lot of no trade days. And number 2, you're going to be missing out on a lot of setups and a lot of ways to make money. Now, on the flip side, I also don't believe you should be having 50 million trading strategies that you're looking for, because then you're just going to confuse yourself and it's just not going to be good. So I'm going to show you guys the 2 that I plan on using the most in 2025. Not saying that I will never trade anything else, but these are going to be my 2 main ones, okay? And if you're looking at my screen, you already know the first one. Now, some of you guys may be like, yo, Chris, didn't you make a video saying you done trading supply and demand? And I would say you 100% right. But I would also say it's fluid. Y'all watch First Take, man, and y'all be looking at Steven's A list, and he be like, the list is fluid. Listen, y'all, my trading strategies is fluid, y'all. It's fluid. I change. I think about things, and I may switch it up. All right, so yes, I was done trading supply and demand. I did make a whole video on it. But now it's back. And the reason why I brought it back is because when I was looking at my trading results of 2024, I realized I had like a lot of no trade days, and I had a lot of days where I was just missing like beautiful supply and demand setups. So I was like, you know what, bruh? Let me go ahead and bring it back one time for the one time. So we going back, well, we're not going back to supply and demand, but we are bringing it back into the fold. And I'm gonna go over it briefly. I have a whole video on it if you want to go more in depth on it, but for this video's purpose, I'm gonna go over it briefly, okay? I'm gonna keep it very simple, guys. When it comes to supply and demand, you are looking for 2 things, bruh. 2 things, right? Very simple. There's more things, but the main 2, guys, are gonna be break a structure, gap attached to your zone. That is it. I'm keeping it simple today. Break a structure, gap attached to your zone. So if we look at this first example, this is a bullish example, okay? Matter of fact, let me go ahead and delete this. So when it comes to supply and demand, we're looking for a break of structure first, right? Where did we break structure here? Right here, right? We closed above these highs. That is a break of structure. Now, some people, they count wicks as a break of structure. Me personally, I need bodies to close above or below whatever I'm looking at, right? So we got candle bodies closing above these highs. That is a break of structure, okay? Now, what is the last bearish candle before that break of structure? This right here. This is our last bearish candle before that break of structure. And the second thing I told you guys is we need a gap attached to our zone. When I say gap, I am talking about a fair value gap, okay? Real briefly, once again, okay? If you guys don't know what a fair value gap is, it is a 3 candle sequence, okay? In a bullish example, right, it is when the high of the first candle and the low of the third candle do not overlap or touch. And in a bearish example, it is when the low of the first candle and the high of the third candle do not overlap or touch. So if we go back to this example, all right, matter of fact, let me just go ahead and draw this box out so y'all can see what I'm talking about. This right here is the gap, okay? But let's go ahead and get that off the screen, and let's go to the actual chart. If we look at this 3 candle sequence, okay, the high of this candle, let me delete this one more time. The high of this candle is here, right? That is the first candle. So the high of the first candle and the low of the third candle, right, do not overlap or touch. This right here is called your fair value gap, right? And so you want a fair value gap that touches or that is connected to your zone, right? So if I draw a box from this last bearish candle, this is our demand zone, right? We have a gap attached to it and we have a break of structure. So this is a valid demand setup. Now there are 2 ways you can enter this trade, right? If you learn from where most people learn from, I believe, most people learn from Doyle Exchange, right? He'll tell you to wait for a break of candle, right? So you have been entering up here, stop loss below the candle that went deepest into your zone, and then he would be telling you to look for a 1-to-1, right? This is how most people learn how to do this, okay? Me personally, right? I'm a little bit more aggressive. So when I actually took this trade on Thursday, I entered at the zone, right? So I entered right at the zone, right? This is a little bit more aggressive, and it's more aggressive simply because you're not really waiting for a confirmation. You're just entering, right? But I entered right at the zone. And as far as my targets go, I'm always looking to get to the next piece of structure, right? So if I'm entering a buy, I'm looking to just take it to the first high before I even think about taking profits, right? So for this example here, if I entered right at the zone right here, right? That's a horrible line, but if I enter right at the zone right there, then the first high at this point, if I go in replay mode, actually make it a little bit easier for you guys, right? If I entered there, then the first high is right here. So that right there would be my TP1. And if we were to put the long tool on here, right, we can see that my stop loss is below the demand zone if I'm entering aggressively. And my TP is again at that first piece of structure, right? So at that first high, I was looking at a 1-to-2. Okay, now I didn't end up getting a 1-to-2. If you're in the Discord, you already know this. I was trying to hold it for a little bit more because I thought we had some more room to go to the upside, but didn't end up getting it. But anyway, it was a dub either way, right? If I play this out, boom, we see that we got to that TP1. And again, when it comes to supply and demand, guys, break a structure, gap attached to your zone. Okay, so that was a buy example. Let me show you guys a sell example. All right, guys, so when it comes to a bearish setup, we got to understand it is the same rules. We are looking for a break of structure and a gap attached to our zone. So looking at our chart right here, we're on the 15-minute chart, right? We see we have a break of structure here. Bro, let me turn off my magnet, bro. We see we got a break of structure here, okay? It is a break of structure because we had a candle body close below this low. Matter of fact, let me just use my lines, bro. Let me stop tripping. We had a candle close below this low, a candle body close below this low, not a wick. All right, so that is our break of structure. Right now we're looking for the last bullish candle before we broke that structure. Right, this is for a bearish example, so we're looking for the last bullish candle. So as we can see, I already got it marked up. This is our last bullish candle before we broke that structure. It's also beautiful that we swept some liquidity as well, but I'm not going to go into that. I don't want to confuse you guys too much, but this is our last bullish candle before we swept that structure, before we broke that structure. Okay, so do we have a gap attached to this zone? Yes, we do. The low of the first candle does not overlap or touch the high of the third candle, right? So our fair value gap is present. That is now following the main two rules of supply and demand. So again, depending on how you want to do this, if you want to be a little bit more safe or if you want to be a little more aggressive, it's on you, right? If you want to be safe, right, you would enter after the break of the candle low in a bearish example, and in a bullish example, you're looking for a break of a candle high. But in this example, obviously we're bearish, so we would enter at the break of the low after touching this zone. Okay, stop loss above the highest point in your zone that a candle reached into your zone. And then your TP, depending on how you want to do it, you want to have a static one. You can. Some people are looking for a 1-to-1. Some people are looking for a 1-to-2. I told you guys how I like to do it. I like to look for the recent structure, right? So me personally, I would have been going for this recent low right here. This is a trade that I did not take, by the way. I just want to have full transparency. But if I were to take this, I would have been taking this potentially aggressive, right? I mean, we gotta look at this stop loss. I mean, this is kind of steep. I ain't gonna lie to you, it's a little steep. So me personally, I probably would have waited. I ain't gonna lie, in this example, I probably would have waited for a break of the candle to see if my stop loss could be a little bit better, which in this case it was. It was slightly better, so I probably would have waited for a break of the candle. And in this particular example, I would have ended up looking for a 1-to-1 before I even thought about going break even, because that's just how it worked out with the structure. But anyways, guys, this is supply and demand. Very simple, very straightforward. Again, you're looking for two things, okay? Two main things, right? There's obviously more that can go into this, but two main things: break a structure, gap attached to your zone, okay? Those are the two main things when it comes to supply and demand. Now let's get into one of my favorite although rare, instances in the market, and one of my favorite strategies I love to use, which is the uni. Y'all, it is a sad day in history, bruh. Like, y'all, we just gotta sit here and cry. Like, bruh, I gotta go to the 30-minute chart to go back far enough to show you guys a uni, bruh. A clean one, right? Don't get me wrong, there was a couple that I could have showed y'all like on the lower time frames or whatever, but when it comes to YouTube, man, I like to show y'all like clean, like just textbook setups, bruh. And it's sad that I have to go to the 30-minute chart to find one, bruh. Like, this is sad. This is horrible. But nonetheless, your boy is going to show you, okay? So we on the 30-minute chart. Keep in mind, I do not trade the 30-minute chart, but guys, understand that price is fractal, okay? So whatever I tell you on the 30-minute chart, right, just break it down to the 5-minute chart, which is what I typically trade on, the 15-minute chart, whatever you're trying to use, okay? But the next strategy, guys, I'm going to be showing you is the uni, okay? Now, with the uni, I don't want to say it's more complicated, but it's more steps. Okay, so when it comes to the uni, you looking for a couple of things. Number one, you are looking for a sweep of liquidity. Okay, that is either an old high or an old low. Okay, very simple. Number two, you're looking for a failed order block, right? So a failed order block, basically what we just went over in the previous section of this video, right? When we were going over supply and demand, and I was showing you guys how to choose which candle to use as your supply, which candle to use as your demand, right? You're looking for a failed zone of that, okay? And then number three, right, you're going to be looking for a fair value gap, which is what we went over in the previous section again, to be overlapping with that failed order block, which turns into a breaker block, okay? And then, bruh, after that, it's real simple. You just enter at the fair value gap. Okay, so let's go ahead and get into these examples, right? I got a bearish example, really two bearish examples back to back with you guys, all right? Real simple. By the way, I have a whole video going over unis as well, right? If you want to go more in depth, go watch that video. But when it comes to unis, bruh, I love these things, right? But they're called a unicorn for a reason, bruh, because they don't happen often, man. And it's really sad when they don't happen because, bro, when these things hit, they hit. If you guys were here with me when these things were just popping up left and right, like almost on a daily basis, like for a month and a half, 2 months, bro, y'all saw I didn't lose for real. I made a whole video talking about 100% win rate, bro, because it was a crazy time. It was a crazy time to be alive. But you know, anyway, let's go ahead and jump right into this. So we're looking for a sweep of liquidity. Now, keep in mind, guys, I am on the 30-minute chart. Okay, so, all right, we got a sweep of this old high here. All right, this is your sweep of liquidity, guys. I have a whole video going over liquidity if you don't understand what liquidity is, right? But we got a sweep of that high, right? This is your last bearish candle before the sweep of that high, right? So ordinarily, right, if you were looking to trade supply and demand, this would be your order block and you would be looking to, you know, take an entry off of here, looking for a continuation to go higher. Unis, you're looking for reversals, okay? So we got a sweep of that liquidity. This is your failed order block. How is it a failed order block? Because we have a candle close below this order block, okay? It's very important to make sure this is clear, guys. When it comes to unis, you do not want to be taking a setup if it is only wicking below. Okay, you want to have a close below, and the candle that's closing below, you want it to be the second or third candle in the fair value gap sequence that you are using to enter the trade. Okay, you don't want a wick, you want a candle close below, and the candle that's closing below, ideally you want it to be the second or third candle in your fair value gap sequence, right? So we got a sweep of liquidity, our failed order block here, which turns into a breaker block, right? A breaker block is just a failed order block, right? And then we have a fair value gap overlapping this breaker. Congratulations, your uni setup is now complete. How do you enter this trade, Chris? All you do literally is just enter at the opening of that fair value gap. And again, with me, guys, I'm targeting, right, the recent low. Right, I'm just targeting opposite liquidity, right? So if we take liquidity, I'm targeting the opposite liquidity. Now, in this particular example, if I was trading this on a 30-minute chart, right, and I see that, okay, matter of fact, let me just show you guys the stop loss placement. Okay, when it comes to the uni, guys, typically I'm putting my stop loss above and or below the fair value gap candle itself, depending on how big the stop loss is, or how small I should say. I would include the 3 candle sequence, but it really just depends. Most of the time, if you guys go back in my Discord and look at my previous uni trades, most of the time my stop loss is literally right above or below the fair value gap candle. But in this particular example, when I'm looking for targets, right, and I see that, dang, bruh, I'm getting less than a 1-to-1 targeting this recent low. Okay, I may go break even at that recent low, but I'm for sure going to target a little bit more, right? So even if it's coming down to this low, or if I'm just going to trail my stop, because we can see it never really got there before coming back to take you out at break even, right? If I see my target is less than a 1-to-1 at the bare minimum, bro, all right, I may go break even at that target, but I'm gonna hold it a little bit more to see if I can make a little bit more money, right? So that is the uni. Okay, this is a bearish example. We have another bearish example here that I can literally just jump right into, right? So we swept this high here. We got a sweep of this liquidity. All right, real simple, y'all. Real simple. This is your last bearish candle in a bearish example for the uni. This is your last bearish candle before the sweep of that liquidity, right? This is now your order block that is going to fail and turn into a breaker block. And then again, you want a fair value gap to overlap with that breaker, which we do have here. Okay, then simply, like I said, you enter at the opening of the fair value gap. Very simple. And I'm going through all of this very quickly, guys, because I'm just showing you the strategies. All right, if you want more in depth, I got videos on both of these strategies on my channel. But again, we enter there, stop loss above the fair value gap candle. If you want to, you can put it above the 3 candle sequence. Me personally, 9 times out of 10, I'm putting it above the fair value gap candle. And then I'm targeting opposite liquidity. Again, if this is, if the risk to reward isn't, too good, you know what I'm saying? Okay, cool. I'll target more, right? I'll target the previous day's low, right? Or I'll look to hold, right? And just trail my stop loss, right? Very simple, guys. Now, let me see if I can find you guys a bullish example. All right, y'all. So for our bullish example, we're still on the 30-minute chart, man. Like I said, this is sad, bro. This is just truly sad, right? But it's the same rules applying, right? We're looking for a sweep of liquidity, failed order block, fair value gap overlapping that failed order block, enter at the fair value gap. Very simple, okay? So we can see here, right? We got a sweep of this liquidity here, right? This is actually a high probability liquidity area. If you don't know what that is, go watch my previous video. Going over the uni in depth, but we got a high probability liquidity area sweep here. We swept London's low, right, with this push down, right? The last bullish candle before the sweep of that liquidity is here, right? So this is our order block that we are looking or anticipating it to fail, right? Now, some of you guys may be wondering, how do I know when to anticipate order block to fail and when to use it? Guys, there's a lot of things that go into getting your bias for the day and things of that nature. Again, I got videos going over all of this, and then I got more videos that's going to be coming out as well. I can't go over everything in one video, okay? But anyway, this is our last bullish candle before the sweep of that liquidity that we are now anticipating to fail, right, and turn into a breaker block, which it does here by the form of a candle closing above this order block, turning it into a breaker. And then now all we need is a fair value gap overlapping with this breaker, which we do have here. And then, guys, very simple. We're just looking to enter at the opening of the fair value gap, stop loss below the fair value gap candle. And again, this is another example where, we were just targeting the structure. It wouldn't be a great RR, so we would have to hold it for a little bit longer and just trail our stop loss. And guys, I'm gonna be honest with you. These uni examples are not amazing, okay, because they are on the 30-minute chart, okay? What I might do is I might just post in the community tab some of my uni trades that I took last year and show you guys what they look like, because the risk to reward on these is horrible. But if you guys remember the video I made last year when I was talking about 100% win rate, bro, the risk to reward we were getting on unis was crazy, bro, and it was really just a beautiful time to be alive. By the end of the day, man, these are my top 2 trading strategies for 2025. I hope you guys learned something. Again, I didn't really go in depth on these strategies in this video. If you want a more in-depth tutorial, in-depth educational video going over these strategies, I definitely advise you to go tap in with the other videos I have on them. I have a supply and demand playlist, and I also have a uni playlist. So go watch those videos, and you can learn these strategies in depth. But as always, man, if you guys have any questions, just tap in with me, drop it in the comments, any questions that you guys might have. Follow me on Instagram if you guys haven't done that already. And yeah, man, that's all I got for today's video. I'm gonna catch you guys in the next one. I'm gone.